Jimmy. So this week's topic, the tip of the week, what we're going to be covering is the in-home objections. And guys, like I said, man, we've been running this series for a few weeks now. We've covered door knocking objections, how to make a phone call, phone objections, and this week, what Jimmy and I are going to bring to you is how to handle in-home objections. But Jimmy, before we get into the how to handle the in-home objection, I think the biggest thing that people need to understand is is honestly the best way to handle an in-home objection is to never get one in the first place. You know what I mean?
Thank you, Joe.
Um, it, in fact, if you follow, I mean, if you're a student of the game and you follow the system, if you follow the senior solutions system, the whole in-home presentation is designed so when you get to the end and you do the three option close, is that you don't get an objection. They don't tell you they want to think about it. They don't tell you it's too expensive. They point to one of the three options that you laid out and they say, Jimmy, I'll go with this one. Okay. In fact, if you do the in-home presentation right, I would say, Jimmy, correct me if I'm wrong, but you throw a figure out there. I would say close to 50% of the people are not going to give you an objection, that they're going to pick an option from the three option close. You think 50% is accurate? You think that's too high? Am I in the game there?
I think that's very conservative. I would say I probably experienced a little bit higher than that
Yes.
without an
Yeah. So when you do the in-home presentation and you lay it out and you do it just the way we teach, you say 60% maybe are picking an option without any
yeah,
objections. Yeah.
yeah.
So there you go, guys. We could end the call right here. We could just say, listen, you want to close 60% of your people that you actually meet with, just do the in-home presentation right. And part of that is, you know, when you meet with them, being personal, being warm and fuzzy, doing the bond and rapport, find out a little bit about your clients, let them know a little bit about you, who you are, what you stand for. Um, get them to talk about why they sent the card in. Bob and Mary, I've been doing this for a long time. You sent this card in, and I got to tell you, most of the people that send the card in tell me, the main reason they want this information is they just want to make sure is that when they pass away, they're not leaving a financial burden to their family. Is that why you sent the card in? That's kind of setting the stage for the emotional part of it, and then you get them to dive in. Yeah, I don't want to leave my kids with this burden. Oh wow, I can understand that. Out of curiosity, um, you know, which of your family members are going to be responsible for this? And then doing the upfront disclosure or doing a version of it, and I think that helps too because if you do the upfront what we call the upfront contract or the full disclosure, then you're if there are objections, you're getting some of those objections out of the way up front. So then you don't have to handle them at the end because what I can tell you, handling objections in the beginning is a lot easier um, than going through a 10-minute presentation or however long it takes you to go through your presentation and waiting to the end. Man, flush out. It's like quail hunting, man. You want to flush the quail out or the pheasant. You want to get them up and so you can shoot them. You got to get the objections up and out of the bushes, so they're not, you know, depressing those objections down to the end. So I'd recommend doing the upfront contract, and then how that kind of goes is I'll just say, hey, Bob and Mary, out of curiosity, do you know how these state regulated plans work? They're going to say, no, I don't know how they work. Say, well, let me just explain to you how they work. Bob and Mary, I'm a state licensed field underwriter, and it's my job today just to help get you qualified for a program. I'm actually required to ask you a few health questions and review your medical history, and this will help me understand what program is going to be the best fit for you and your unique situation. And then I'll know what you're eligible for and what you can apply for. And then I'm just going to lay out and I'm going to show you what most people are doing in your situation. And then if we can find something that works, I'll do a little bit of paperwork. I'll send it into the office, and I'll know if you're approved for the program within 5 to 10 business days. Does that sound fair enough? So just by doing that or something similar to that, or just laying it out, laying the process out, because here's what I can tell you: people are more likely to do business with you if they understand the process of how you do business. Does that make sense? So do that upfront contract, and then you can flush out a lot of stuff like, well, you know, I already have life insurance, or I don't make any decisions without my children. See, then you can handle all those objections up front, and then you're not handling them towards the end. Then, of course, what you want to do is the after you do the full disclosure, then you want to go into the folder. So Bob and Mary, before I show you how these programs work, I put this folder together for you. I've got a lot of great free stuff in here for you. And then boom, that's when you lay out the Senior Solutions folder, and then you start going through the folder. Okay, so these in-home objections that we're going to cover with you, you can use either in the front when you flush out the objection, like, hey, I can't afford anything right now, or I don't make any decisions without my children, or you can use them in the back end if another one comes up. So really study these. These are all available. Basically what I did, I just cut these out of the magic formula so you have them. So let's go ahead and move on. So Jimmy, what we're going to do is we're going to handle variations of the I can't afford anything right now.
Sure.
And then, guys, these are the ways that they're written down. And then also what Jimmy and I are going to do is we're just going to kind of ad lib and maybe give you some variations of some different closes. But this first one, they just come out and say, whether it's in the beginning or the end, they just come out and say, Joe, I just can't really afford anything right now. So guys, we have it all written down for you. Hey, actually, Jimmy, I'm kind of glad that you brought that up. Actually, it's not the money that qualifies you for the coverage, it's your good health. And what I have found, there are many people that would be happy to pay much more for this coverage if they could just qualify. But unfortunately, they waited too long and it was too late. Today, you have a choice. Isn't that true? You don't have to, okay, then you wait. I'm sorry. I'm reading this. I don't have these memorized. But then it goes in that the client says, yes, but I don't have the money today. Then we can just come back. Well, Bob, Mary, I'm not surprised. We didn't expect you to have the money today. In fact, most seniors say because they only get paid once a month. However, the good news is that I'm not actually going to collect any money today. Isn't that great? And then you just explain that, we're going to get them qualified, and then we can coordinate that with their benefit. In fact, we can go out up to 30 days, guys, until their first benefit or before their first premium is due. Now, Jimmy, I know you've got a really good way of kind of explaining this to clients about the money. I really like the way that you explain it to them. Could you kind of go over that? Like if I give you the rebuttal, and that's the one thing, when someone says they can't afford it, guys, what they probably mean is that they don't have any money in their bank account today. Mm-hmm. Don't assume when someone says they can't afford it that they can't afford anything. They're probably just talking about like, they've already spent their Social Security money for the month, so they need to wait until their next paycheck. But Jimmy, could you kind of go over the way that you handle
Sure.
the money situation? I think it's so good.
Well, the first thing I want to cover is, like, let's say you're knocking on their door and you hadn't done the presentation yet, and it comes out in the beginning.
Okay.
The first thing you have to understand there is that most of the time those people are very easy to sell to and they know it. So their only defense is to say, I can't afford anything right now. And they're hoping to deter you so you go on to somebody else's house. So I have sold a ton of people, and those are the biggest premiums I get when they tell me at the door, I can't afford anything right now. Literally, the biggest premiums I write. Okay. So when they give me that objection, I just tell them, listen, I'm not here to sell you anything you don't need. You filled out this card requesting the information, and that's all my job is to give you the information you requested. And then I'll just say, if you have a few minutes, may I come in? Or, something to that effect. I just want to be able to do the presentation. So just know that up front. I kind of get excited when they tell me that, to be honest with you. All right. Then let's say you did the presentation and you already did the 3-option quote. Now they're telling you they can't afford anything. So the best thing to do there is I just say, well, let me back up for a second here, Joe. What I want you to understand is the way this process works is, first off, I don't collect premiums. I'm not going to ask you for any money today. What we're going to do, and I tell them what we're going to do, right? I'm leading them, is I'm going to fill out an application uh, requesting coverage for you on your behalf. So the first thing we have to do is get the approval. So we're going to submit this to the carrier. Once they give us an approval, then we know for sure, this is going to go in force for you. We're also going to set up a date when we're going to, schedule your first payment. So this is something that, we can set out as far as 30 days from today. But most of my clients set it up to coincide with their paycheck. When do you receive your benefits? Do you get it like on the first or the third, or is it the second or third Wednesday of the month? So they usually say, let's say they say it's the third. Okay, well, you know what? Today's the 6th, right? Why don't we start this for you August the 3rd? Will that work? Yeah, great. Okay, so which one of these best fits within your budget? And then I just go back to that. Okay, great. And I just move forward. That's
Right.
the way I handle it.
And that's assuming that this is assuming you've already done the 3-option close. You go right back into
Mhm.
which of these, and then if you haven't, if you're giving that objection up front, you just handle it exactly the way Jimmy handled it, and then you just move on with your presentation. But that's absolutely beautiful. This next slide, there's a bunch of versions of I Can't Afford It. Guys, just read through these and pick out the one that you want. This one says, I understand your concern. I understand when you are on a limited income, it's tough, but Mrs. Jones, most everyone I see every week is living on a fixed income. What we have to realize is what we have to realize and understand is that death is something that is certain. There's no ifs, ands, or buts. There comes a point in time in life when we have to take care of the inevitable, Mrs. Jones. Who's going to take care of your affairs in the event of your death? So this just comes down to really being able to talk to people in kind of reason with them. But I always like getting back to the emotional side. Like use reason and then always flip it back over to emotion. Mr. Jones, out of curiosity, if you don't take care of this, who's this financial burden going to fall upon? Well, I guess it'd have to go to my kids. Well, are they in a position to write a check for 10,000, or is that something that would devastate them? And in most cases, what you're going to find is that the apple doesn't fall too far from the tree. So if the clients that you're talking to are living paycheck to paycheck, there's a good chance, like most Americans that are working hard, busting their asses and trying to support their family, is that they're not the kids aren't saving any money. They can't afford to stroke a check for $10,000 to cover final expenses, or maybe even 3,000 just to cover a cremation. And then so there's version 1, version 2, version 3. I can't afford it. Um, and then the third one just says, I understand, Mrs. Jones, that when death occurs, there are sacrifices that have to be made. Two sacrifices come to mind. It's the emotional sacrifice and then the financial. Um, Only time and God can take care of the emotional side of losing a loved one, but we have to take care of the financial part. We have to determine in our minds what is easier to take care of, is doing it a little bit by bit, maybe small monthly premiums, or having our loved ones have to bear that financial burden all at once. Out of curiosity, who would have to pay for your arrangements at the time of your passing? Boom, it's tying right back into the emotional side.
Hey, Joe, before we move on, can I cover some other variations?
Yeah, absolutely. Yeah, we really want to dive in really, really deep into this and have this available for everyone to be able to go back to.
Okay, sometimes when they say I can't afford this, um, what they really mean is that it's too expensive, and what they mean by that is that it's let's say for example they have some sort of medical condition and they're either going graded or maybe they're getting a standard tobacco rate, so the cost of insurance is higher than what they anticipated. So they're saying it's kind of pricey for what they're getting. They're not saying they can't afford the payment. Okay, got to understand the difference, right? And I think Joe had the next slide coming up, but that so one variation on that is you got to justify the cost, and so without going into a whole lot of time on it, what you want to do there is basically remind them of their medical condition or of their tobacco use, and then go in and show them quotes from the other carriers. So, we tell them in the beginning that, we shop around, right? So you got to show them that. So pull up your phone, quote them Mutual, quote them Foresters, quote them Liberty Bankers, Transamerica, pull everybody up, American Amicable, show them that that we really are giving them the best value, and that in itself will, usually handle that objection that it's too costly. Now, the other thing I just want to say straight up is sometimes people say, "Wow, you know that's kind of expensive, or that's more than what I thought it was going to be," or something like that. And if I get a good feeling that I know that they're going to go with it, maybe it's more of a complaint, then I just say you're exactly right, Joe. But that's the small sacrifice that we pay to ensure that our loved ones don't have to bear that financial burden when we pass on. And I just say that one statement and they just say, yeah, you're right. You just move forward, so don't make it bigger than what it is. Um, another
Can
thing,
I butt in real quick?
sure.
You, you're absolutely right on that. The a rookie mistake and the worst thing you can do is when a client says, "Oh my God, this is so expensive," is to take that as an objection and then start trying to overcome it. Well, what do you mean it's too expensive? Well, what are you comparing it to? And just agree with them. Do exactly what Jimmy says. Is just absolutely agree with them. And they know it's expensive. They know that their health is jacked up and they're 75 years old. Come on, you know they've seen the other stuff they've gotten through the mail through AARP, Globe, and Mutual of Omaha. They know what this stuff is going to cost. They're just, you know what? I mean, it's just human nature for people to complain that, oh my God, it's so expensive. I mean, we do that for a lot of things, man. I mean, when I pull up to the gas pump, I'm like, oh my God, I can't believe gas is this expensive. I'm still going to fill up my tank, because I got to get to where I need to go. But just, going back, agree with them. Don't get into a confrontational thing and having to justify you don't, a lot of times, I guess my point is you don't have to justify the cost. Just agree with them, use the statement that Jimmy made, and then move on.
And then I want to cover one other scenario, Joe, and that's where, let's say that, you're talking to the people and, you know, let's say that, everything's going well, like you got a good rapport going on, there's good communication between you two, and you get the sense that it is a legitimate, it's not a complaint, it's a legitimate concern that they do want it, then maybe their budget just does not afford it. So one of the things that I tell them is that, look, Part of my job is to kind of help people with their finances, and maybe we can reallocate some money. Maybe we can help you save in other areas to cover the cost of this program. And so one of the areas that we can work on is the cost of prescription drugs, which, Joe showed the slide earlier about the prescription savings plan. You know, uh, you just got to dig in. Sometimes you can go in and you can save them money based on what they're already paying on their drugs. And let's say that savings is $80 a month. And then you can go in, and maybe you don't want to take all the whole 80, but you show them some 40 or 50, $60 options for life insurance. They're still coming out $30 a head. Um, you could also, here's another big area. You can say, I usually notice a lot of times people are watching cable TV or they have direct TV, and I'll ask them, who do you have your cable service with? Oh, I have it with, Spectrum Cable. Okay, great. How long has it been since you signed a contract or renewed? Oh, it's been a long time. Well, how much are you paying a month on that? Oh, I pay 100 and, $50, $180. You would be surprised at how many people are spending $150 a month for cable TV, but, they're not willing to spend 30 or $40 a month for a life insurance program. So what I do is I just simply ask them to go get their bill, take a look at it. That most of them have what we call a triple play. I think this is a nationwide thing. That's where they got internet, phone, and cable, right? So then you call Spectrum or whatever the cable company is provider, and you just tell them, listen, I'm kind of helping out this person. They're a senior citizen. They're really tight on their budget. They don't want to give up their service. Is there something you can do for us? They will turn around and give them a promotion. They don't even have to reduce their channel lineup, and they'll save them 50, $60 a month. And then you use that savings to cover the cost of the insurance. So, I mean, again, you don't want to go into all of this unless you've narrowed down that that is a legitimate thing, that they really want it, that they really just can't afford it. There's other areas you can go into, but you have to dig in, you have to get creative, and you have to realize that, part of closing is becoming a problem solver. Um, so, Joe, I don't know if you want to add to that or just go on
No,
to the next
no,
objection.
nothing to add to that, man. That was perfect. Um, Guys, the next slide is just kind of a continuation. It's, when they're concerned about the cost, I guess they're maybe not saying they can't afford it. They're just concerned about the cost. And just use what Jimmy has been giving us. And then, this is just talking about, Mr. and Mrs. Klein. I'll just kind of ad lib this, like when they're concerned about the cost. It just talking about, Mr. and Mrs. Klein, let me ask you a question. I know in your heart of hearts that you don't want to leave your family with this huge financial burden, right? They're going to say, yeah, of course. In fact, let me ask you a question. If this program was free, would you take advantage of it? Of course, they're going to say yes. Well, obviously, as when you invited me in your home today, is that you probably knew there was going to be a cost associated with this program, and nothing worth doing is ever going to be free. But let me ask you a question. If we could design a program for you for as little as $2 or $3 a day, it's really less than a cup of coffee to take care and do what's right now and give you the peace of mind that you're looking for, and would provide you, and we will provide you with all the discounts that you qualify for, and just educate them and just kind of move through that objection. But I think I just think in general it's clients or customers sometimes are just programmed um, to give you that objection that it's too expensive or it costs too much, whether it's a legitimate thing or not. And then to go back on, and just to piggyback on what Jimmy was saying too, is, one of the beautiful things that we do, and Jimmy used the word reallocation, is that to explain to your clients, like Mr. and Mrs. Client, the beauty of these programs is that you don't have to spend any extra money than what you're already receiving. What most clients are doing in your situation, we're just simply reallocating 5 to 7% of what you're currently getting from Social Security to fund your program. Let me show you how it works. And then you just explain it to them that you're simply just reallocating funds, and a lot of times that really works very well. The next objection that we have is that my children make all my decisions, or I want to talk to my kids first. Guys, here's the thing. I mean, we really don't get that objection that often, and usually if you do, it's just kind of a smoke screen, kind of easy to overcome. But here's what I can tell you: at the end of the day, the kids do not want to have this discussion with their parents. Okay, nobody wants to, and this is what you have to explain to your clients: is that Mr. and Mrs. Klein, I understand they want to talk to your kids, but let me just explain from reality, and I've lost parents before, is that as a child, your children don't want to have this discussion with you about your dying. They only want to make decisions and talk to you about what's going on now and what's in your life now. At the end of the day, this is your decision. Because if you ask your kids may just tell you, well, don't worry about it, we'll take care of it. But in reality is that they don't actually have the funds to take care of it. It's your responsibility to make sure is that when you do pass away, is that you're not leaving that financial burden to your family. Now let me ask you a question. When you sent this form in to get the information about these programs, isn't that the reason why you sent it in? Because you wanted to make sure is that when you do pass away, you're not leaving a financial burden to your family? They're going to say, yeah, you're right, but maybe I still want to talk to my kids. Well, great. Let me explain how this program works. First of all, you can't make it, and then you just go in and explain to them. First of all, Mr. and Mrs. Client, we can't get the cart before the horse. You can't make any decisions today anyway, even if you wanted to. This is simply just the application process. Let me explain this to you. Let me explain how this works. And then you kind of go back in and you just kind of redo the upfront contract and explain, here's what we're going to do today. My job is not to try to sell you anything that you don't need or want or can't afford. My job is to show you what your options are available. So what I'm required to do is just ask you some simple health questions, find out exactly what you would be eligible for. And after I do that, we can determine, I can show you the programs that you would be eligible for, get you qualified for the maximum discounts. If we can find something that looks good and meets your needs and of course fits your budget, I'll fill out a little bit of paperwork. I'll send that into my office and send it into the insurance company. I'll get an answer back within 5 to 10 business days. And then only after that, after you've been approved, do you make a decision on whether or not you want to proceed forward. Then when you talk to your children, you actually have something to talk to them about. Right now, it's all just hypotheticals because we don't even know if you're going to be approved or not. So that's kind of a long-winded explanation, but that's something that I've used many times with clients about wanting to talk to their children, and they agree. At the end of the day, the two things that they agree is that they don't want to leave their kids with a financial burden. That's why they sent the form in, and most clients will agree is that when that time comes that their children really are not going to be in a financial position to cover their final expenses. So Jimmy, then I'll flip it over to you and tell us how, when you get that objection about either my children make all my decisions or I want to talk to my kids before I move forward.
And I'll add to that, sometimes it's my spouse. I need to talk to my spouse.
Right.
So,
Okay.
Either way, it's a smoke screen is what Joe said. They're trying not to make the decision. So I usually agree with them. I say, Joe, that's great. I really recommend that you do talk to your kids about it because this is an important decision because this really affects them. Have you talked to them at all about this? Or maybe it's their wife. Have you and your wife talked about this recently? And I'll get them to open up and kind of tell me what some of those conversations were like. most of the time they say no. No, I haven't. Okay. Well, I think it is important that, that you talk to your children, you keep them involved, because ultimately they're the ones that you're trying to protect. Now, Joe, just want you to know we don't collect premium. I don't ask you to pay anything today. So having said that, let's go ahead and move forward and get the application into the insurance company so we can get the approval process going. And while we're doing that, that gives you time to talk to them. And then if they have any questions or concerns, here's my card. They can give me a call, or be glad to come back out and meet with them. But let's go ahead and get this submitted, and that gives you time to talk to them about it. Sometimes I'll ask them, what do you think, they'll say, what do you think their response is? And they usually always say, oh, they'll say to go ahead and do it. And if that's the answer they give me, then I'll say, well, let's do it. But
Yeah, exactly.
anyway,
Let's
that's
go
that's
for it.
how I handle it.
Yeah, because I
Um,
mean, and just ask them, listen, Mr. and Mrs. Client, or Bob, let me ask you a straightforward question, man. In your heart of hearts, do you want to take care of this so your kids aren't financially burdened, or do you really want to leave this financial burden to your family and have them to have to pay for it? Well, no, I don't want my kids to have to pay for it. You just talk to them, man, and they'll come around. But that's great information. Jimmy, how about I want to think about it? How do you handle that one?
well, I usually say that, yeah, I mean, it's a lot of information to take in, Joe, and definitely want to think things over. But you can't buy anything today. In fact, I don't ask you to, for a check, or, you're not going to pay anything today. Let's do this. Let's go ahead and fill out the application. Let's get this turned into the insurance company, and I'll name them by name, to Mutual of Omaha or Transamerica. And that way they can start their process on the approval. They'll look at your prescription history and your medical information bureau. And while they're doing that, that gives you time to think about it. And then once we get the approval, I'll check back with you. I'll let you know, and then we can decide whether we're going to move forward, or maybe you want to lower or increase your coverage. But we can do that at a time. But the first things first is we need to get the approval. So then I get out the application. I just start writing.
Yeah, that's perfect. So, guys, here's two good scenarios on how there's option one, option two. I typically do something very similar to what Jimmy says when someone says, "I want to think about it." I agree with them. I say, "Well, of course you want to think about it." Um, just agree with them, and well, Bob, I understand. Of course you want to think about it. I agree, and you should think about it. And while you're thinking about it, you're probably going to have questions, right? Well, yeah. And then I just kind of go back and explain, well, Bob, after all, this is just the application process. My job is just to help get you qualified, find out what you are going to be approved for, and then just go back in and just go back in and use the same rebuttal that I used before. And a lot of times I'll just look at Bob and I said, Bob, let me ask you a question, just a straightforward question. In your heart of hearts, is this something that you feel like that you want to do? And then 9 times out of 10, they'll say, well, yeah, okay. And then just like what Jimmy says, well, here's how it works. And then, well, let's do the paperwork. Let me get you approved. It's going to take me, 5 to 10 days for you to be approved. This way, you've got plenty of time to think about it. And in the meantime, while you're thinking about it, I can come back with you with a hard decision to let you know if the insurance company is actually going to approve you or not. Only then will you then accept the coverage if you want to move forward or not. And then we have, I want to
Hey,
think
Joe,
about it. Three. Yep.
oh, okay. I didn't. Okay. Before you move on, I was gonna say, let's say you try this and you try to assume the sell and move forward. You know,
Right.
I I always go to the application process first and then try to assume the sell. But let's say they put the brakes on you and they say, no, I'm not ready to do that. I understand what you're saying, but I still want to think it over. at that point, that's where some of these other rebuttals come in. But I'll just interject real quick while I have it on my mind. Usually at that point, I'll just say, no, listen, Joe. Usually when people are telling me that they want to think about it, it's usually for one of two reasons. Either they sincerely do want to think about it and they want to consider, the options, or they're really not interested and they're just being polite and they don't know how to let me down. Be honest with me, which is it? So they're always going to say, oh, we're really going to consider it. Okay, great. Well, now, Joe, it's been my experience that usually what people want to consider is usually the cost. And sometimes people are trying to figure out how it's going to fit within their budget. And other times they're just thinking that maybe the price is a little higher than what they think it should be for the amount of coverage we're applying for. Which one of those applies to you? And then you kind of like just narrow it down, and then you can, isolate the objection and then work on it that way. But I can tell you this, it's always going to be the price. Always is the cost. So you got to figure out, what direction that cost is going, and then you can work on it. And then there's other ways. We talked about, reallocating funds, and let's say you've tried all of that stuff. You can always say, something is better than nothing, and be very realistic with them. Why don't we go with a lower coverage amount, something that we know is not going to take food off your table, is going to be comfortable. And you can always add on more later. Once you get used to this monthly cost and you want to go ahead and increase it, then, give me a call. We'll come back out here. We'll get you some additional coverage. So those are just some of the ways that I handle it.
Got it. All right, so we'll skip over this last. I want to think about it. It's kind of the same thing, repetitive, what we already covered. Well, actually, this it's slightly what I was talking about. Let me actually cover this real quick, kind of a different way. So Bob says, hey, I want to think about it. Well, Bob, you should think about it. And while you're thinking about it, you're going to have questions, right? He's going to say, yeah. Well, let me ask you a question. Does 30 to 45 days, does that give you enough time to think about it? He's going to say, well, yeah. And then you just go into, well, Mr. Jones, we can't get the cart before the horse. We don't even know if you're approved for the program. This is just the application process to find out if you qualify. Can't make any decisions today anyway. Only after you're approved can you decide if you want the coverage. Does that make sense? So that's just another way of handling it to get them. I kind of like that, to get them to agree about the time frame when they say, I want to think about it. And again, just to go back, say, well, Bob, you should think about it. Out of curiosity, is 30 to 45 days, does that give you enough time to think about it? Almost everyone's going to say yes. And then you move in and you explain that this is just the application process, like what Jimmy says, pull out the application and then move forward. The next one is, how about when clients say, well, I already have enough insurance. Okay, now, Jimmy, the ironic thing is that chances are they had that coverage when they sent the form in. So
Yeah.
it really doesn't make any sense. Or what we need to find out is this, when they say I already have enough insurance, are they talking about a policy they've had for years and years and years? Or did they just buy a policy? Did they just take care of it and maybe buy some crappy policy through the mail from Globe or AARP? But Jimmy, when a client says to you, I already have enough insurance, how do you handle that?
Well, normally I get this in the beginning of the
Okay.
presentation at the end because
True.
I've already done a thorough job. So in fact, I don't think I've ever had it at the end. But um,
Well, let's say it comes up at the beginning. Let's say
yeah,
you're right.
because
If you're
let's say
doing
you're
your job
doing your
right,
job like you're supposed to, and you're
yeah,
asking the right questions, right? So
yeah,
what you want to do is you don't want this to discourage you. In fact, you need to be adamant about looking at their existing policy, because I'm going to tell you some scenarios I see often and just recently. Sometimes people tell me, oh, I have $100,000 coverage, I have plenty of insurance, or I have 50,000, or I have 25, whatever the amount is, right? Well, don't just take that and say, "Oh, okay," and move on. You got to dig in and ask to see their policy. Now, let's say you ask and they don't want to get it for whatever reason. They don't want to look for it, or they don't think it's important, or whatever, right? So then you got to justify it. So some of the things that I say, "Look, Joe, you know, I've been doing this for a while, and a lot of times what I see in the field is a variation of policies. And so sometimes I see people that they have a small whole life policy for $5,000, and then they have a rider for 95,000, and they think that they have $100,000 coverage. The thing is that $95,000 rider is a term rider, and it expires after a specified period of time. And you would be surprised at how many times I run into this. People go get their policy and their rider already expired, and all they have is 5,000. Sometimes it's about to expire, right? So don't just ask, is it term or whole life? Because it might very well say whole life on the policy cover and then have a rider on it. So you got to dig in. Other things I'll say is, is this through your work? And then you can talk about, whenever you separate from employment, well, then the coverage doesn't go with you. You're never going to be as young and as healthy as you are today. Let's put something in place that's going to be a permanent policy that you own, you know. Other things you can look at are the obvious, like, is it a term policy? Is it an increasing term? Do the premiums go up every 2 or every 5 years? Another thing you can look at is it a universal life product? A lot of agents don't do their clients justice when they're writing universal life, and they'll quote them the minimum premium, and that minimum premium will only keep the policy in force up to a certain age. So basically, it's a glorified term. And once they reach that age, then they're going to have huge premium increases. So always, throw these things out there, explain. It makes you look like the professional. You know what you're talking about. You want to verify with them, what they have. And I tell them, if you have something that's a whole life policy, the premium's never going to change, the rate, the coverage is never going to change, and you're right that you don't need anything, I'm going to tell you so, and I'm going to tell you to keep it, because I believe in doing the right thing for people. I tell people that, and I do tell people sometimes to keep what they have. But you,
Yeah.
even if that's it, right? You might have other opportunities. You might have a 401k or a IRA that they're sitting on that's not doing anything. You might be able to go into, an annuity presentation. You never know what you're going to come across, but you got to be the professional and dig and find out.
Yep. Just a couple other things I'll add to that. To add on to what Jimmy's saying, when they say they already have enough coverage or they already have insurance, um, use that form that we came up with, the free review, to at least review it. Dust that policy off. Let's get a set of trained eyeballs on that policy to make sure that there aren't any weaknesses. Um, but and like I said before, is that chances are they already had that policy when they sent the form in. So simply just ask them, Mrs. Jones, out of curiosity, you've had this policy for 5 years or 10 years or 15 years. When you took this out, what was the purpose of the money? Were you looking to leave a benefit to your children? And chances are they're going to say, yes, and just explain, and they'll understand how the cost of final expenses has risen exponentially over the last few years. And by taking out, by them receiving this information that they requested and providing them with additional coverage, only that's the only way they'll be able to keep their original policy intact. This way, you can take that $10,000 that you originally took out 10 years ago, and you can use that for the purpose of leaving that to your loved ones, and then using this policy to simply cover your final expenses. That's just another way of justifying it. Also, sometimes you'll get a combination of people say they already have insurance, they have enough insurance, or they may say I already have the money in the bank. Now, the thing about the money in the bank, which is a great um, um, a great thing. A couple of things that we can do. One is that we can also, if they legitimately do have the money in the bank, we can convert that into a single premium whole life insurance policy. But the other thing you just want to explain to them is like, Mr. and Mrs. Jones, that's great that you've got the money in the bank to cover that. But let me just explain something that has happened to some of my clients or some of my, to family members, is that they thought that they were in a great financial position, and then there's a a health issue like a stroke, or comes down with dementia or Alzheimer's, or someone has to go into a nursing home, which is extremely expensive. And a lot of times, what will happen is that if you have to go into a nursing home, and when you run out of funds, if you have to go on to Medicaid, it's going to go through the spin down, which is going to take you all the way down to $1,500. So all your assets and any money that you do have in the bank is going to have to go to Social Security. And guys, they probably know people that have experienced that exact same thing. That's real life that happens. So having money in the bank, which is great, um, it's not necessarily always the solution. Let's see. There's some guys. Here's the end of it. Here's some more variations. I know we're running a little bit over, so we're going to go ahead and end this. But um, this webinar will be posted on the website. But I already have enough insurance. Number two, I'm not interested, and then I want to sleep on it. So you can really use the same techniques that Jimmy and I, variations of what we've been using to handle these same, objections. That I want to sleep on it. That's basically the same as I want to think about it. Okay, and that's all the objections that we have. So, Jimmy, any last words before we let everybody go?
No, you guys have a great weekend.
Okay. All right, awesome. All right, everybody. Again, this webinar has been recorded and it will be posted on seniorsolutionsagents.com. It should be up no later than Monday afternoon. All right, Jimmy. Thank you, my friend.
All right, thank you, Joe. Have a great weekend.
All right, buddy. All right. Good night. Goodbye, everybody.